Hi everyone, Maria Tyler here again. In this video we're going to restate the income statements. And I say income statements, when I talk about restating the income statements, I'm talking about the profit and loss and the comprehensive income statement, with which we have, or we should have, already entered into our company spreadsheet as one statement. So if your company separates them in two statements, as Wesfarmers did, the profit and loss and then the comprehensive income, you will have combined them into one statement when you entered them into your company's spreadsheet. So you have the profit loss at the top and then your comprehensive income at the bottom. If your company already presented them as one statement, you would have just entered that one statement in. So that's what I'm talking about when I say restating the income statements, restating the whole lot. Now, traditionally every year, this is the one we get the most questions about, and it's the one that students say gives them the biggest headache. So hopefully this video today will make it less of a headache for you to restate. So the idea is that we are separating revenues and expenses and the comprehensive income at the bottom into operating and financing. Hopefully that will give us, more useful information for our decisions. So separating revenue and expenses into O and F, and also comprehensive income into O and F. Now, you might realise we've already done this section when we were restating our statement of changes in equity. We actually separated. It was the only thing we split into O and F when we restated that statement. So you can actually compare back once you split it into O and F, or you can just link back to your statement of changes in equity when we complete this section here. It's up to you. Now, there are a couple of things that we need to do to prepare for restating, well, to make our job easier when we are restating the income statements. If you haven't already, identify your finance income. And I mentioned this in the video when I showed you how to enter your financials into your company spreadsheet. So if you haven't already done this, go back through now and identify your finance income. So that was when we went through with Wesfarmers, and I showed you they didn't identify their finance income. So I actually had to go through to the notes and get these figures out. And then I just did a little mathematical sum just to separate the finance income out of the revenue, so that this line, the total revenue, still matched the original financial statements. This little line here is going to make my life a lot easier when I come to doing the restating. That's the first thing. The second thing is to identify your company tax rate. Now, that's very easy to do because in the study guide, I think on page 16, I'll just quickly flick there, Martin's actually linked for you the global company tax rate. So you just have to click on that essentially, and it will bring up your global company tax rates anyway for you. So I know for Wesfarmers, it's an Australian company, so you just have to find what area or what nationality your company is, which hopefully by now you will know because you've written assignments on it already, and look for the tax rates for the last 4 years. Now with Australia it's very easy, they haven't changed their tax years forever and a day, so it's still 30%. But your company may have a different tax rate for every year. So make sure that you are using the proper tax rates for the most recent 4 years. So in my case, it's 30%. So when I identify that straight away, right down the bottom in my working section, I want to actually write that in, company tax rate, and I'll put 30% in, 0.3, and change it to a percentage so that I know that's done. I don't have to go back and identify it. So when I come to actually restating the income statements, which can be a little bit difficult conceptually to start with, I know at least I don't have to worry about going back to find that. I've already got that done, and my finance income is also separated for me already. It must be linked, just like with every other financial statement we've done so far, and we've restated it, we've linked it. So same deal with this one. When we're restating our income statements, please link back to your original financials and put formulas in where possible for your totals, and I'll show you how to do that going through. Here are your checks. When we calculate OI, which is operating income, and NFE, which is net financial expenses, both of those totals must match to CI in your original financials. So obviously this is the total for operating, and this is the total for financing when we split those items of revenue and expense and comprehensive income into operating and financing. So total for operating plus total for financing should match the original total in our financials. Just like every other restated statement has, it still has to match. The totals still have to match. All we're doing is rearranging the statements in a different way. We're not changing anything. We're just rearranging the items and how they're presented. So the totals still have to match. operating comprehensive income and financing comprehensive income should match the split that we've already done in our restated statement of changes in equity. So it should match that restated statement of changes in equities comprehensive income split. So again, you can go back and check that. A lot of students actually choose to link straight to that and check that way. I show you how to link to the original financials. Okay, so completing it, again, chapter 4 in the study guide is all about restating. So from pages 15 to 19, this is where I get the set out from pages 15 to 19 in the study guide. So page 15 takes you through some of the background, and 16 as well, including the finding the tax rates. You then learn to calculate OI and NFE, so that's the total for operating, that's the total for financing. Page 17, Martin shows you the income statement for Ryman Healthcare, and page 18 shows you his restated income statement. So again, he's set it out in this manner, and that's where I've taken this split up, or this set out from. So we do split into operating and financing. We split all of the items in operating, we split all of the items in financing. So we go through split operating income, operating expense, taxation attributable to operating items, and comprehensive income, which again we've already split when we did the statement of changes in equity. The total of that we call operating income. We do the same thing for financing. So income, expense, tax, and CI. Now usually there's only one item, there's only finance income, which we've separated out before. Financing expense, we calculate a tax benefit here because usually interest is tax deductible, so you'll have net financing expenses, so interest generally on your loans and borrowings, and generally you're allowed a tax deduction for that, so there's a tax benefit. So we calculate a tax benefit, we calculate this amount, and then we take away the amount that we've calculated down here from the operating section. So that's how that works. That's probably one of the most confusing aspects for students to understand. So we actually calculate this, and then the figure that we get here, we take it away from the original tax, which we've already listed up here. So what we're left with up here is the amount that's attributable to operating. So tax here and tax here should add up to total tax paid in the original financials. And we've already split CI into O and F originally. So we split that up. The total of this we call NFE. So OI plus NFE should match to your original CI. So at this point, I'm just going to stop. I'm going to replay or include a portion of a video from my lecture from last year, just because I was able to hand draw a diagram when I was lecturing, and I can't do that on my little fancy computer here. So I'll just replay that. Hopefully that will consolidate, for those who like diagrams, the understanding of what we're trying to achieve with restating the income statements. Under each year, the correct tax rate. So we can link to that later on. So that's the second thing. First thing, identify your financial income. Second thing, identify your company tax rate through the link on page 16 of chapter 4. Click this link. Okay, now what we're doing with, I used to just go straight into restating, and in previous terms, students would say, what on earth are you actually trying to do? I have no idea. You start putting headings here and there. So I've decided I'm going to try and just quickly flick through and draw you a little diagram of an overview of what I'm trying to do today. Okay, so we're still splitting our income statement into operating and financing. That hasn't changed. What we're doing is classifying each one into 4 little categories. So I say we look at operating income, operating expense, we split out operating tax, so the tax attributable to operating activities, and we also list out comprehensive income. And we do the same thing to financing. So we'll list out income, which is usually one line. That's what you have to identify, usually in the notes to your financials. We'll also include the expense, which we call finance costs. Usually, again, it's just one item. We will calculate the tax attributable to these items and take it away from total tax paid up here. And we'll also include financial comprehensive income. So we still split, so when we classify our items into operating and financing, we have 4 different categories. So we have operating income, operating expense, we have the tax attributable to operating activities, and comprehensive income attributable to operating activities. And we do the same thing for finance. We have usually one item,
We calculate a tax amount down here and take it away from total tax paid. And we have comprehensive income attributable to financing activities. Both of these amounts, okay, we get totals for both of these, and we actually classify these totals, and I'm going to put the acronyms in here because when we're marking we actually check these particular lines. So we call this one operating income, and we call this one net financial expenses. Now, just like the balance sheet, remember we had NOA for net operating assets and NFO for net financial obligations. If you have the opposite to what I have, you may need to mathematically change your sign. So in the balance sheet, if you had, instead of NOA, you had net operating liabilities instead of assets, you might have needed to change your minus to plus sign. So again, if you don't have NFE, if you've actually got more income than expense, so net financial expenses is if you've got more expense, you might actually have NFI, you might have net financial income. When we calculate the tax, your mathematical sign will change. So just again, with the pluses and minuses, I've had quite a few queries on that over the past week. Just think about it in terms of mathematics. So what I've shown you is for Wesfarmers. If you've got the opposite to Wesfarmers, so liabilities instead of assets or income instead of expenses, so forth, you may need to reverse the mathematical signs. Okay, so these are the totals I want to get to today. And both of these totals must equal your original comprehensive income, the very, very last profit line from your original financial statements. So one of the questions asked today by Rock of Ages, I assume that's someone in Rockhampton, was, is there a way to tell if the restated income statement is correct? So here's some checks. I'm telling you some checks. Your total of operating, which is what we're going to call operating income, and your total of the financing, which we're going to call net financial expenses, must still match the original comprehensive income, the very, very bottom line of your original income statements. That's our overall check. There's also another check that we did 2 weeks ago. We noticed this little section here and this little section here. This is comprehensive income. We've actually already done the split up for comprehensive income between O and F in our statement of changes in equity. So you can also check when you're putting these lines here and putting these lines here, you can also check that these lines are what you've already classified as operating comprehensive income in your statement of changes in equity. And you can check that these lines are what you've classified as financial comprehensive income in your statement of changes in equity. So that's another check. These two must equal what you've already classified in your restated statement of changes in equity. So that's a couple checks. So that's our overview. Still doing O, still doing F. And we do it in these headings according to Martin's guide on page 18 of his study guide. So what the headings look like, we're doing headings for each of these 4 items in all cases. I'll just go to the study guide and show you those headings now. So on page 18, Martin's got, so here we go with the operating side. This is income, expense, tax, comprehensive income. That's operating. We do the same thing with financing. We've got income and expense here. There's only 2 items. So income, expense, tax, and comprehensive income. And that's the end of the restated income statement. So that's the 4 categories. And that's where I'm getting my headings from. So if you do need to, if you're wondering why I'm putting operating revenue, total operating revenue, and so forth, I'm using that structure.
Okay, so now that we know the overview of what we're trying to accomplish, let's go and do it, and I'll follow this format as presented. So first of all, once we've identified our finance income and our company tax rate, we just have to classify it into O and F. So that's our first step. So again, go through your financial statements, only classify, we don't want to classify headings and totals. You only need to restate the actual items. So don't classify your headings and don't classify any totals. Most of mine are all O's, except for finance income and finance expenses pretty much. So finance costs. Income tax expense is operating, but we're also going to split that up into financing. So income tax expense is a little bit like cash. We have to allocate to operating and allocate to financing, and we do that by calculating a tax benefit here and then taking it away from the total tax paid, which we put up here. So we put the actual tax amount that we've paid, we just lump the whole lot there to start with. And then down here, we'll calculate a portion attributable to financing, and then we'll take that portion away from the total tax that we've paid up the top that we've lumped. So that's what we're going to be doing. So this total tax that we've paid, I'm going to originally link it to the operating section, just put that whole amount in the operating section, and then I'll show you how we calculate the portion attributable to financing. So my discontinued operations, operating and operating. Do I want to classify headings or totals? Okay, my exchange differences, they are operating. So this is all my comprehensive income now. So again, I could link back to my statement of changes in equity because look, I've actually calculated all of these already. So all of mine are operating except for the changes in the fair value of financial assets. Now you can just link back to your restated financials up here. See how we've already put operating comprehensive income? So you could simply link straight back up here, or go through and reclassify. Sometimes your companies actually set them out in a little bit of a different manner. And Wesfarmers has done that. So I'm actually going to restate or recalculate all of these and see how I go. Let's see if I can find my one item of financing first. Changes in the fair value of financial assets, net of tax, which was just 2. Is that right? Yeah, it was. Just 2. Okay, let's have a look. Here it is, these 2. You can see there's 3 and 1, so it is, and that's the fair value of financial assets. So I found it, so this is good. So I know both of those are actually financing components. Okay, so the rest are all O. Let me just put that one on hold. O, and O. Okay. So the only financing comprehensive income I have are the changes in fair value of financial assets, and I've actually checked that does match. I only had 1, so it's fairly easy for me, but hopefully it's not too hard for you to also match. That's one of the checks actually, that we split our comprehensive income up in the same way in our statement of changes in equity as we do in our income statements. So now that I've gone through and classified everything as O and F, it's just a matter of listing it out in my restated income statement. So scroll down, let's start. So the first heading I'm going to write is operating income. And again, this is the format. This is the structure that I'm following. That's why I say set out. Operating income is the first thing I'm going to do. So operating income, bold and underline, and then I'm going to link. So everywhere I see O in operating income, which actually is there, and I know I've got some others. So none under my expenses, but here I've got other income, and I've also, that looks like it's a positive amount, so that's also income. So link that one as well. And I think that's it. Then I've just got financing costs and income tax expense. All right, so that's all the operating income that I have. This doesn't need to be bold and italicized. So let me just link the figures. So revenue, my other income, my share of profits. That's all of the income. Now, this is when students email me, oh, it doesn't balance, it doesn't balance. The most common error I find is missing out items. Like they've forgotten an item here, or they've double counted it over here, or they put it in as a negative here when it should be a positive, and blah, blah, blah. So if you're linking it, that should negate the negative positive thing because you're linking it back to your originals. But what I suggest you do in terms of making sure you've included everything in your original financial statements is, as you put something in, so revenue, other item, and share of profits, I just suggest that you highlight those lines. Just put them in, say maybe red. So we've already done those, oh sorry, not those. We've linked that one. So just the ones that you've linked, and those, they're the only 3 that we've covered so far. So as you put them in, you know that you've dealt with them. You've already included them. So that's my operating income. That's this little section done. I need a few items. Now I'm going to do my operating expense. So first of all, let's put a total in. Let's call it total operating income. And sum that. Okay, now let's do operating expenses. Now I've got a few of these. I think pretty much all of them were operating. Yep, so I can link the whole lot just as is, nice and easy. Let's link it down. Fill without formatting. And again, just link all of my expenses. That's nice and easy. Whoops. Let me do that properly. Fill without formatting. Let's see if it'll fill across for me. It does, that's great. Let's do another sum just to check the sum of all these. So I know, like, my sum should match my original one because I should have just linked all of my original expenses were operating. So 64477, yep, so I'm happy with that. So again, that's my operating expenses done. So you can see it's not really that difficult. It's not designed to be difficult if you follow this method. So I've done my income, I've done my expenses. Now I have to do my tax. And again, this section's easy. We just got to set it up a little bit right. So we'll just list tax expense. And tax reported is what's reported in your financials. So this is my heading, because I need to do a little calculation here because I want to put the tax that my company has paid. I'm just going to lump it here for now. So this is the one I have to split into O and F. So I'm just going to link there, just literally put it there for now, lump the whole lot there. And here we're going to type something called tax benefit. And that's going to be where we take out what we apportion to the financing. We don't know what that is yet because we haven't calculated it. We won't actually calculate it till we come to do it down here. So just lump the whole lot of tax that we've paid and just let's lump it in operating to start with and leave it there for now. But let's include a little line so that we know that will be our prompt that we have to deduct what we've allocated to financing out later on. And we'll call this net tax expense. And we'll put a little formula in here and it will be equals that, take away this portion. Now the reason I've added it is because I'm keeping my signs the same as the original sign, and you'll see what we do with our signs here. Actually no, sorry, that's actually correct. It's what I've paid minus what I'm taking out for financing. So let's just not confuse ourselves. And that's a total. So let me italicize that. All right. So more about that later. Let's leave that as is for now. So we've done income, expense, tax, and now we're just going to split up our operating CI, which should match what we've put in the statement of changes and equity. Operating comprehensive income. Okay, and I had lots of these items. All of them actually, except for those two items were, so from here 1, 2, 3, 4, 5, 6, 7, 8. I've got a link down. A couple extra. Yep, that's it. Okay. So let me undo what I've just done. Fill without formatting. And I can delete those 2 lines. Okay. Bit of formatting. Let's link my figures in. So exchange differences are here. Skip the next 2 and my offset to revaluation starts here. And then I can link the rest of the figures down. Will it let me do it across? Yes, it does. That's so cool. All right. Okay, so that's my operating comprehensive income. So let's call it total operating comprehensive income. Now make sure that this matches. This is the total that I was saying earlier, should match to what we've already got in the statement of changes in equity. This is our first check, 18, negative 78, negative 192 and 15. 18's negative 78, negative 192 and 15. So it does. So I'm happy. That's my first check. So that's my operating side done. So now I just have to add up all of these totals and make a total called OI. And it's really important we identify it as OI. I'll call it comprehensive operating income after tax. And I want you to put the OI there. It's really important that you put that OI there because it makes life so much more easier when you come to do your ratios later on. You can just, when it says OI in the ratio section, you can just go and find OI. So please do take time to put the acronyms in. Now, so operating income equals the sum of all of these. So logically, we have to go through and see what we've got. So I have got my operating income, my total expense there, my net tax expense there, and my total of that. Okay, so what I want to do is say equals my revenue, so my operating income, minus my expense, but notice that I've already entered it as a negative, so I can just simply sum that together because mathematically it will take it away. I've entered it as a negative because I've linked it to my originals where I entered it correctly. So that plus my tax expense, again because I've entered it as a negative, mathematically it will take off my tax for me, plus my operating income. So I can just do a sum of all of those. That will be my operating income. That's my OI. Okay. All right, so that's the first section done. I've done this section. Now I'm going to do my financing section. So let's put, now there won't be too much here. And instead of doing financing income, financing expense for my one or two items, I'm going to call it net financial expenses because I'm following the format that Martin set this up in. So here I'm going to link. Now again, you should have a look and see which one's greater. Generally your financing expenses will be greater than your financial income. But if you have financial income that's greater than your financing expenses, then you can put financial income first. In Wes Farmer's case, I'll just show you, the finance costs are $264 and the finance revenue is only $84. So I have larger finance expenses than I do finance income. So hence why I'm putting my finance expenses first. So equals, let's link straight to those. Got to link to my F's, remember? I'm going to do income and expense together because there's not many of them. So finance costs there and finance income here. I only have two, and most of you will only have two, just finance costs and finance income. Finance costs there and finance income here. So see why I said life is so much easier if you've separated this finance income out, because you don't have to go looking for it now. And if you haven't done it, when your marker comes to marking it, they will ask you to go back and do it. And it makes a difference in your next step. So it's important that you do go back and find your finance income. Okay, so finance costs and finance income. I forgot to do my highlights as I'm going through. So I've done all those. I know I've linked all those. I don't need to do my total, so that's fine. That's a total. I've just linked this one. I've done that one. I have also linked my income tax expense and I've lumped that under my operating, so I've done that one. Oh, my discontinued operations. Look at this. This is really good. I've done this one. This is why it's important to highlight because I've forgotten that. And I've done this so far too. So I've forgotten these two. So my CI wouldn't have balanced because I've actually forgotten those and they're operating. So they're operating income. Looks like it's income, positive income here. So I need to go back and insert those in here. So insert two lines here. Link that straight back to Air Liquide. And link that to here. Lucky I went back and did that because I would have been out and I would have had to go back and do this anyway. Just fixing up my formatting a little bit. Okay, so I'm glad that I did that and hopefully that's picked up that. No, it hasn't. Lucky I checked that too. So check your totals all the time to make sure that you are adding that in. So now my totals should be adding and everything else will flow through. So that's great. So now I know I've dealt with those as well. So this is why it's important to highlight. I just showed you why, because I'd forgotten those two. All right, so now it looks like the only thing I have to add in is my financial comprehensive income. But before I do that, I have to calculate the tax. So I've done income and expense. Finance costs minus finance income. Let's call it NFE before tax. Equals the sum of those two. And I can do the sum because I've entered them as per original financials. So mathematically, I can sum it. Okay, so NFE before tax is my total. So that's the difference. So I've done financing income and financing expense. I'm up to the tax component. So this is how I want to set it out. I'm going to call it my tax benefit because I need to calculate that. And it's simply my financing amount, my net financial expenses, multiplied by, so asterisk to multiply in Excel, my tax rate. And that's really good. And drag that across. Now, before I drag it across, I just want to point out something. This is very important. I have net financial expenses, which means the tax man allows me a deduction for my net financial expenses. I don't have to pay tax on it. I get, because I've paid more in financing costs than I earned in financing income, I get to deduct that off my tax. So it's actually a benefit for me, which is why I've called this tax benefit. So it has to be logically the opposite in dollar sign to what my net financial expenses are. So I've had to pay an extra $180 million to the tax man. That's my extra cost over my income. He's allowed me to deduct that. I've had to pay that to the bank. The taxman has allowed me that as a tax deduction. So it's saved me the equivalent of my tax rate, which is 30%, times that amount. Now, I need to show that as a tax benefit. So it has to be an income. That's a saving to me. It's a tax saving because I was allowed to deduct this amount. So we need to make sure you put a negative sign in front of this. It has to be the opposite symbol to whatever your NFE is. Now, if you have NFI, net financial income, which means that you've got finance income greater than finance costs, then it's going to be the opposite. So if you've got a positive figure here, you need a negative figure here because that means you've had income, which the tax man has taxed you on, and you've had to pay that as an expense. So it has to be negative. It's coming out. And you can call this your tax expense rather than your tax benefit. So I have NFE, so mine is negative, and my tax benefit is a saving, so it's positive. So again, if you've got the opposite, change your signs. So tax benefit here. Now, this is a portion of tax that I've just calculated as attributable to my financing income and expenses. My net financial expenses, I've calculated the tax portion on that. What did I have to do? I have to go up here and take it away. So equals negative whatever this is. This is where it has to be. So it's added in down here and it's taken away up here. Otherwise you're double counting it. Because this line didn't exist in your original financials. We've just added it in just then. We've just calculated that ourselves. Everything else has been linked so far except for that. So we've calculated this figure. So we've added it in here, so we take it out here. So the net effect overall in our comprehensive income is nil. So our totals will still match. So all we've done in this component is we've calculated the tax attributable to financing activities, and we've taken that tax amount out of the total tax which we lumped up in operating to start with. So effectively what we've done is apportioned 1211 to our operating and 54 to our financing out of our 1265 amount. So that's how we apportion the tax. That's the difficult part of this. But if you follow my prompts and my steps, you should get this part right. So now we've also filled in that little blank that we left there before. So we've apportioned the tax. I've done income, expense, the tax. The last thing to do is the financial comprehensive income. And for me, that was there were only those the two lines that I had to add in. So I'm just going to put NFE before financial comprehensive income here as another total equals the sum of my NFE before tax minus my tax. So again, because I've entered them negative and positive, that automatically lets me do a sum. Bit of formatting. Okay. Now I need to put my financial comprehensive income, and again, check that this links, that this matches to what you've done in statement of changes and equity. So this is the only parts I haven't highlighted in red so far. Every other thing I've highlighted in red. Luckily I went back and checked that, remember, because I'd forgotten those two items. So now if I highlight those in red, I should go through just quickly and check that all of my figures are red. If they're not, ask why. That's okay, because that's a total. I've got, that's a total, 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 and that's a total. So that's it, that's great. I've done everything. I've included everything. So knock that back to automatic so it's not red. So now I just have to total my finance. So I've done income, expense, tax, and CI. I've got to total NFE, and we're going to put the acronym in for NFE. So let's just do a total for financial comprehensive income, so I can check that against my statement of changes and equity. Then let's call this net financial expenses after tax, and put in brackets NFE on there, so you're linking to the right NFE. A lot of students put NFE up here. Don't do that. Put it in the correct position, which is down here. So this one is just a sum of my financial comprehensive income, the CI component, so which is 2, and again I know that matches back up here because I checked that originally when I was entering it. So my total financial comprehensive income was just 2 for 2014. I only had that one item. Okay, and my net financial expenses after tax will be my net financial expenses before comprehensive income plus my comprehensive income. So that should be my NFE. Now, here's the big test. I've calculated OI and I've calculated NFE. If I add those two amounts together, it should equal back to my original comprehensive income. So here's my test. Comprehensive net profit after tax, and that is called CI. Let's put CI there as well. And that should equal my OI plus my NFE. I'll just make sure that my formulas are right. So I've got these two summing together, income minus expense. My tax benefit is taken out up here and added up in the original one. So my net financial expenses before are simply the sum of those two, which is correct. My net financial expenses after is my NFE before plus my financial comprehensive income. Oops. And that's right. So that should be correct. So I've got OI plus NFE. That should be right here. So let's go and check. Let's quickly do my total. And bold and italicize that. Okay. Very good. Okay. I'm a bit worried. I don't remember those figures. Oh dear. They're not matching. Okay, so now we have to go and see where I've gone wrong. So this is good. This is good. This is what you might get, 2891. So I'm going to start by taking this away from this one and see what I'm at by. I'm at by 108 equals Yeah, okay, I've done something with my tax. What have I done? Oh, it might be this formula. Yeah, sorry, I was right the first time. There we go. Yeah, now it matches. 2891, 329, 2248, 2706. Okay, so what I did up here was my tax reported, so I lumped the original lot up there, apportioned my 54, calculated my tax benefit down here, apportioned my 54, and make sure, this is very important. See how it's positive down here? It has to be a negative up here. It has to be a negative up there. What I did wrong was in my formula, my total. So net tax expense, I needed to, because I've already entered them as negatives, I needed to sum it like I've been doing for every other total. Because I've entered it as a negative, I can sum it mathematically. It will still take it away. So tax reported minus my negative amount. So I can just sum that. And so that was my error. So essentially I was double counting my tax benefit, which I apportioned in my financial aspect. But that was good. But so you just have to go back through, check your totals, check that you've put your signs the right way, that it makes logical sense and so forth. And make sure you're discussing it with other students. So that's your big check. So I've done it now. So I've done my OI plus my NFE. It equals my original CI. You need to make sure that it does, because otherwise you've made an error somewhere. Also, your other checks that we said originally were check that, so we've done that your operating comprehensive income and your financing comprehensive income also match that in the statement of changes in equity, which again, mine do because I've checked it as I was going. Hang on, here we go. So operating comprehensive income and financing comprehensive income, those two lines match my operating comprehensive income here and my financing comprehensive income down here, which they do. And that's the completed restated statement of changes in equity. Restated balance sheet and restated income statements. That's the whole lot done. So hopefully that's been useful for you, and hopefully you have a bit of fun and you learn a bit by doing this restatement. And the next video, we're going to be moving on to the ratio side of it. So I look forward to seeing you then.